Daily trading recap. It is first day of March, month of March here on Tuesday, the 1st of March, 2022. Another day in the red on the P&L, but still learning, still growing, and still invigorated to keep after it. Lots of learning and stuff Ola to get into, so let's get right after it. Of course, we're wearing the hat today. Bad hair month, bleeding into the month of March here. It's unfortunate, but we're working with it. Market internal dollar volume on the day, NASDAQ $253 billion volume as of 18 minutes after the close here. NYSE $438 billion volume. OTC's $3.1 billion volume on the day. I played one paper trade short and also taken one small little swing of DWAC here. We'll get into that in a little bit. But again, starting off with going small size now with this volatility first half hour spread trade on the S&P 500. Now able to do it just through MES and I went with 5 contracts both ways, looking for only really 2 points above and below that open price within that first half hour, and screwed myself out of it. I covered the short position after this little bottom as it was reclaimed above VWAP here, and sure enough, 6 minutes later, it ended up producing action below that little open price where I was establishing that position, and that was even 8 minutes before would have been my cutoff time target to look for that price action to happen. So I've lucked out 2 times in the past in the month of February as I've been doing the strategy of cutting. However, I adjusted that strategy. That saved myself a little bit of loss that eventually would have been a longer or bigger loss had I stuck to the original game plan. And then I carried that same mentality into today a little bit, how I've gotten away with that in those past 2 days. And today was definitely one of those examples of if I'm going to define a strategy and define the exact parameters and go to extreme lengths to try and find these parameters in the first place through the backtesting and data collection, I've got to freaking stick to it. So this was definitely one of those days of slap in the face, adding to that rule set that I mentioned in that monthly recap, which is an awesome little jot down for me, just over explanation in my head as well too of where we've come from and where we're potentially going. And I think today was just another lesson of if we have the game plan, stick to the game plan. And then as we learn and grow, and this strategy specifically as well too is one of those that if something pops up and something comes along, then we can adjust the game plan and very quickly attach it to the next day, because it is kind of a repeatable. I mean, we're almost trying to do it every single day. But on top of that, I do think that the next steps for me going forward, specifically with the strategy for this little bad streak I've just been in, is going to be solely playing this trade specifically on Fridays. I just think Fridays, of course, from the data are just the most volatile days. Most volatile days, they offer the most opportunity. And I think it's just going to be more beneficial for my own headspace mindset to, force is the word that's coming to mind, but just put all the chips in one basket on that day as saying, hey, I think this is the most convicted I feel on those days to try and place this trade. And just it's become so hard to try and balance a risk reward on each weekday when, okay, looking at Tuesday specifically or Wednesdays specifically or Thursday specifically, and then they're varied between their all-time data that we have or the last 50 days, depending on the variance that's in with that, and then the last 3 weeks that we're looking at, hey, where are we in this current market ecosystem environment? Trying to balance and juggle all those different factors and then play that out with each weekday, and then looking at just the overall factors of, okay, what's the after hours move? What's the volume been looking like? What's our gamma exposure looking like? And I know I can see myself adding a lot more variables to that with more research that I know I want to be doing here for this little strategy. But gosh, yes, for right now, I think Wednesday and Thursday, I'm going to hold off on trading this strategy. And sure enough, they're probably going to be the most awesome, beautiful days with points within that first half-hour market open on the S&P 500 of trading above and below that open price, going both long and short. But I'm willing to give that up just to clear my palate, clean my perspective, and just open my eyes up to recognize, hey, where have we come from? Where have we been? How can this back-tested data strategy actually apply to future real trading? Now that we've gone through the mud with this real trading, how can we take that along with the backtested data and then move along to potentially find any sort of vindication for this strategy going forward in the future? So that is where I'm at currently with this strategy today. I'll talk about, let's get into DWAC first. Absolutely beautiful, only taking one share, similar to what I did on the 10th or 11th of January here around this time frame of as we were continuing to hold this little sideways action and getting volume to come in a little bit on this third day, I believe is when I started that move as it was looking pretty decently. That I think 53 comes to mind as the price I had on that one share of looking for a more multi-day move continuation over the next week, over the next few weeks. And it's just been continuing to hold too extremely well in my book to see. I mean, I could absolutely see this thing breaking back below 90 within the next few days here. Maybe we get a few more months even of price action trading between $80, $90, and then potentially a further move in the future. But it's just, as we saw today, I think there's just too many players in this stuck short, and too many players that could potentially come in behind this if price action does start to just continue to press and press and press. And I think one player certainly got their squoziness squeezed today. As you can see here, this huge volume candle pushing price above 96, but immediately getting rejected after that, having a little perky attempts after that, but just coming right back down to VWAP essentially. And so even based off of the top of that, I don't want to throw myself into confirmation bias here, but seeing that, I could also see more people hopping into all the back of that for a longer term short strategy based on this quick rejection here as we're continuing to break to new relative highs here, not compared to the craziness that was that from last year or even this day here on 218. But as it's just continuing to hold and press and climb its way higher, that the bias there playing into that short perspective, I could see more people hopping in on the short side there and potentially adding into that catalyst to push this thing further over a multi-day perspective. So still holding my one share entry of 93.72, completely top ticked this candle here. I was trying to get in as it was breaking 93.40, and of course hard to get filled even relatively with my one share. But then as it's just moving away, I'm like, I really want to be in this, but I don't want to be chasing, but I kind of want to be in it right now. So then of course get top ticked that candle, moves a little bit higher, pulls back, has another breakout attempt, pulls back to VWAP, but did not break. If it was breaking intraday here, breaking this low of 91.55, I definitely was going to be thinking of cutting that, but I think that's still for me relative right now. 91.55 around that area, or $90 going to be my risk level for this one, as just okay, shoot, it's not going to happen right now. I'm not going to say that it doesn't happen within the next few months even, but just for the time frame that I was looking for, from pretty much looking for that same type of perspective or sit as I had on that January 10th, January 11th, looking for this type of move, looking for the exponential hockey stick move there within the next few weeks for DWAC here. Let's see some craziness coming back into that one. So now on to INDO. This was a paper short that I had playing for the kind of extended parabolic gap down. Not a very voluminous day yesterday as it had a new high here at 15.15. I could actually pull up IMPP as well, which was a big trader in the chat today. That was a huge rollover, and kind of what, the ideal, what you want to see for a first red day after this parabolic move here. A lot of guys playing into this one today. Taking a nice short here. Pretty much that beautifully from that perfect morning session on there. And then just now relating that to INDO, of seeing that, yeah, that's kind of the idea of what I want to see here on this one. But if this one was a little bit more tainted because of these perks that we've had on a more intra-daily perspective. After it did have the pop, sell off a little bit. Okay, now that next pre-market is continuing to climb, but it's just kind of pushing here at different levels. Kind of ran even here on this Monday, yesterday, as it has this just huge perk immediately at the open of pre-market. Again, kind of disrupting what you would consider the natural flow of how these stocks want to move during market hours that way, but you got to take it nonetheless and factor it in for the chart there. So it's continuing this nice little trend line down. We'll see if it, had I still been holding this thing, see if it was going to break that, then I probably would have been using that as my risk factor for that one. But I feel as though I've done this many times before, where I establish these positions, get in short, just kind of blanket, really not looking for any hard specific pop to get into, but starting in short, in pre-paper, through TradingView, and letting it play out, just using 13, that whole dollar level area, as a risk factor. If we're testing there, then I really don't think the chart's going to happen. I don't think the trade that I'm looking for is going to happen if price action is starting to test higher than that, and if the pop becomes more than that above VWAP there. It did have a little reclaim above VWAP, got to just under 12.8 there, but sure enough, just started to sell off. And then, of course, I got to step away, and I set a stop loss in there at break even, which, stupid me, I've done that time and time before, and I feel it's specifically on this style of playbook trade too, that that's just how they get you. And it perfectly gets right to that open price level. It's not necessarily red to green compared to yesterday's close, but it was perfectly right to that level. How does it freaking do that every single time? And then sure enough, starts to sell off even harder from there and go to a very nice price point. That's beyond 10% from where my entry was, just under 12.5 there, around that $11 level area. So I certainly would have still been holding going into tomorrow, definitely taking some off, over half the position I could have seen myself taking off if this was a real trade, if I had good position size on it. But then, yeah, still leaving a few lingering shares on, looking for a potential move closer to $10. Yeah, looking to even just test these lows here. The ideal, just like trying to slam or hammer this move, would be to look for the break of these bottoms here and try to test these former highs. Of any technical levels, we're going to show some support around there. But yeah, for the move that I'd be looking for, I'd be pretty much just taking my profits very quickly for how much that I've done this strategy or followed this shorting a backside strategy as of late. So that is all I had for trades on the day, all I wanted to talk about. But just kind of in closing, I still feel there's a lot more research that I want to do for this specific spread volatility trading strategy. And this interesting book that I'm bringing out, it's actually right here. If Then, Jill Lepore, talking about the Simulmatics Corporation and specifically how they kind of started during the Kennedy presidential nomination, of just really during the invention and creation of computers, of how they were able to take just raw data of humans, turn humans into data points. And it's just, I'm kind of relating a lot of what I'm doing now into that same type of factor, but obviously, like, spoiler for the end of the book, as they're alluding to a lot in the book as well, that this company goes bankrupt and it just ends up becoming a hot mess. And it's, that little conundrum that I'm going through now of how many people before me have tried to do this same exact thing of trying to play SPY, trying to pick out simple data points or just repeatable, consistent trades. And of course, there's bots like crazy everywhere that do that same thing every single second of every single day. But just even the immense amount of number of people that have tried to do the same thing, is this just, I don't want to say a waste of time, but am I just going down to chasing an endless rabbit hole of trying to pursue this? Or is there some just small glimmer of light in this specific venture for trying to trade this specific strategy here? So I'm certainly not done with it yet. I'm not at the point of turning back or giving up for this strategy, but I'm excited to just continue to plot away and push myself harder to see how far can I take this. And yeah, I want to use the example of Thomas Edison with creating the light bulb of just, it only takes one. It just takes one way. I can find hundreds of thousands of other ways that SPY doesn't trade, but all it really takes is just one good trade, to quote Mike Bellafiore, to make me a successful trader, to get me out of this hole, to get me to where I want to go. So that's what we're pursuing. I thank you guys sincerely for watching. We will catch you guys on the next one.